This is just the overall Australian house price index for capital cities versus what I call my long-term income anchor, which is essentially an anchor based on household income. You can see how expensive property's been for 10 years now. The cycle's been driven by interest rates, obviously, but I think there's a structural interest rate story. You can see the correction we've seen has taken our house prices from 30% overvalued down to around 20. It's up a little bit because of the rise in prices this year. So the big question, I mean, this is something that we should all think about, but no one in Australia really wants to. But we talk about a lot of our problems around housing shortages, housing affordability, productivity. I mean, the question that doesn't get asked enough, is this the function of interest rates just being too low for too long? And is there a case to be made for putting rates up to a level that's more in line with our fundamentals? It'll cause some distress, but does that give us a more robust economic outlook? And I think that's a conversation that doesn't happen. We are living in fear of higher interest rates in this economy constantly. And I think it's a big risk for the performance of our economy over the long term. And we certainly can't expect to get any productivity growth if we've got heaps of zombie companies and low rates and speculative money going into inflation protecting investments rather than into building real businesses. So